definitely worthy of doing a real quick live before I leave. It's 3:30 on Thursday, November 10th. Today, you've probably seen the headlines. If you have any money invested in the stock market, if you're a real estate agent, a mortgage professional, or a home buyer right now, you are well aware. And if you're not aware, you're going to be aware right now because I'm sending this out to everyone that I know. We saw the greatest one-day rally in mortgage bonds in the mortgage industry that we've seen in over a decade. And it's because the CPI numbers, which basically lets all of us know how good or bad inflation is in America. CPI numbers came out today and they were soft, 0.2 of a point lower than whether it was what they expected or the year over year, but CPI numbers came in lower. What does that mean? And so what I'm going to try to do with this video is in 2 or 3 minutes or less, simplify this for you. Inflation in America is out of control. So the Fed comes in and you've seen this over the last year. The Fed is raising the Fed funds rate. You've seen that, not mortgage rates, but the Fed funds rate to push down inflation. Okay. All of the efforts the Fed's put in, maybe this could be up for debate, but I'm just going to tell you what this means. It looks like right now that inflation has been controlled as of right now. We'll wait and see next month's numbers. But look at what the markets did. This means something. The Dow up 1,200. Finally, thank you, Jesus. I'm not losing my life savings in the stock market. Matt, if you're listening to this, good Lord, what a day. 1,200 point rally today. So investors, it means something to investors, but look at the mortgage industry. Mortgage bonds rallied over 200 points today. So yesterday, if 30-year fixed rates were right around 7%, today they're right around 6.375. So almost 0.7 of an improvement in mortgage rate in the last 12 hours, just from yesterday, from Wednesday to Thursday. Again, I'm going to come back to this. What does this mean to you? Real estate agents, get this out to your clients. If you're a client of mine watching this, what this means is on a $600,000 loan amount, these are not quotes, these are just ranges and examples, but on a $600,000 loan amount, this saves you, this news, the movement in the market today saves you about $250 a month on your payment, or that same rate yesterday might have cost you 2 points to buy it down to, let's just say 7%. Today, you can get that same exact rate without those points. So a $600,000 loan amount, that's saving you over $12,000 in closing costs. So either $250 a month by lowering your rate because of the news, or same rate, just not having to pay the closing costs for it by about $12,000 in points, or about $50,000 to $55,000 more in buying power. That's the power of mortgage rates right now. I'm going to bet that you're going to see some home buyers right now. I'm teaching a home buyer class tonight. You're going to see some home buyers get some confidence now. You're going to start seeing this is maybe that little kick in the rear end, that little boost, that little pat of encouragement that home buyers need right now to get out there. Because here's the thing, there's not a lack of home buyers in the market today. Up here in the Seattle, Pacific Northwest area, greater Seattle area, there's plenty of home buyers out there. They're being more cautious and they're being more slow to making their decision than they ever have been, picky. Okay, because of the high interest rate environment, because of the uncertainty in the economy. So, hey, this is big news today, big news in the stock market, big news in the mortgage market. Let's throw all that out the window. And let's say you're sitting on the sidelines, you don't need to buy a house, you're not a realtor, you're not a loan officer. What does this mean? This means that what I've been saying for the past 4, 5, 6 months, that mortgage rates are tied to inflation. There's a lot of things economically speaking that's tied to inflation. When inflation gets under control, because it's out of control, it's going to be good news for mortgage rates. It's going to be good news for housing. And it's going to be good news for the economy. So I want to wrap up with this, and I want to share this with you because I think it's really, really important for you to see this. I put together this graph last week. And what I did is I took inflation. So orange is inflation, CPI numbers that we saw today. Home appreciation Case-Shiller index year over year, 30-year fixed rates, and the Fed rate. And I stacked them on top of each other over 60 years, since 1970 to current. There's 2 things that I noticed by looking at this data. One, look how in line all of these factors, they move together, they move in sequence with each other. Okay, that's the first thing. We've been talking about this for months. Here's the big aha. I don't like talking about the 80s because I think this was just crazy out of control. But look, every time mortgage rates spiked, okay, they didn't last for long. They came back down. Look, they spiked up, they came back down. They spiked up, they came back down. My point in telling you this, every time rates would go up and they'd spike, they'd come back down within a year. Look at what's happening right now. I'm not trying to predict the future, but rates went way up this year. Greatest increase in mortgage rates in over 40 years. Okay. Could this be the relief that we're looking for? I don't know, but a greater than a half a percentage improvement in mortgage rates in one day is pretty darn good. I'm pretty optimistic and I'm pretty excited with this news. If you're a real estate agent, share this with your clients. If you are a home buyer, if you're a client of mine or want to be a client of mine, you're thinking about buying in 2023, understanding, working with a professional that understands this data is really, really important. If you're a loan officer and you have any questions, ping me, reach out to me. I'm happy to go over this with you, but this is a big day in the stock market, big day in the mortgage and real estate industries. This could be the boost that we need to turn things around because it has been a crazy, rocky 2022 so far with just the uncertainty and the fear. Great news. It's November 10th, Thursday, November 10th, 2022. If you have any questions, reach out to me, but I wanted to explain what this means to you and it's good news so far. Bye for now, you guys.